While some online bullion dealers continue to charge $4 over spot for U.S. Mint Silver Eagles, SD Bullion is selling 2016 Silver Eagles for just $2.29 over spot for any quantity. Again, that's just $2.29 over spot for any quantity. If you haven't joined over 25,000 new customers by making the switch to SD Bullion, what are you waiting for? You could save hundreds or even thousands of dollars on your next order. SD Bullion, the lowest prices, period.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, joining us today for a special edition of the show, we have two guests that we haven't had on in quite some time. We have Tyler, the co-founder of Silver Doctors and SD Bullion, and especially of note, we have Keith Neumeyer, the CEO of First Majestic Silver. Keith, it's great to have you on the show.
Well, thanks very much.
All right. Well, it's been quite the week in the markets here the past week and a half. Gold and silver were hit pretty hard the second half in August with all of the mope coming out of all the Fed's mouths that rates would be hiked in September. And then last Friday, the jobs report came out and sentiment completely shifted. Gold and silver jumped up quite violently, and then they've been managed back down the second half of this week with the Fed still trying to convince everyone that they're raising rate hikes in September. And it's possible I may have to eat crow with as much as they're pushing this. I've been saying for quite some time I can't see that there's any chance that they're going to raise rates less than 2 months prior to the election, but the Fed seems to be putting all of their effort into convincing the market that they're going to do just that in September. So let's start out with that, Keith. What's your take here on the gold and silver here? And we'll include into that discussion really the correction we've seen over the last 4 to 6 weeks.
Yeah, it's just shocking to me actually that people put so much credence in what is coming out of the mouths of some of these Fed governors, and I quite honestly don't even think they should be allowed to speak to the public. The government should put a lid on all of it and tell them to keep their mouth shut. But they seem to all want to be in the limelight. They all want to be movie stars, so they all want to be interviewed by CNBC and other places and create fame for themselves, and they just gyrate the markets. I was listening to a moderator this morning, and he's saying the Fed is creating so many buying opportunities or trading opportunities in the marketplace. It's amazing, and they're gyrating gold up and down like crazy. Gold's been caught in a range of basically low 1300s, 1301 to 1305, all the way up to 1340 to 1360, and you trade that range back and forth, and a lot of guys have been really doing well doing it, and it's really the Fed just creating these trading ranges in all these different markets around the world, and it's quite comical, but it is what it is, and the market's very, very headline driven. I don't think that. Quite honestly, I like the Fed just to raise the darn rate and get it over with. But I don't think they can. I just don't think the economy or the markets could handle a rate increase. But for whatever reason, they want to keep that out there, that it's a possibility just to kind of buoy up the markets and also create this uncertainty and probably even keep gold down from taking off too dramatically.
With the weakness of the economy as it is, despite the propaganda that they leverage with job reports and particular statistics that they can point to and whatnot, and the rate of acceleration for interest rate normalization that the Fed is speaking about, combined with the fact that we have such economic weakness worldwide. I mean, we're definitely in a recession worldwide. That kind of a scenario is actually bullish for gold, and rising interest rates have been associated with some of the strongest periods where gold just takes off and blows to the upside. I wonder what your feeling is as far as when you look at the shorter term expectations and how we see these shorter term shifts in sentiment, and we definitely blew very strongly to the upside in the sector, and mining shares were astounding performers. So it is normal to see corrections like this. It's not like there's necessarily a change in the fundamental thesis. And I know you agree with the fact that we are in an ongoing bull market. I'd love to take a moment and have you share with our listeners what you see as far as what's going on.
Well, sure. You have to remember, going back to 2002 when gold was $250 an ounce. It was a 10-year bull market. Ending in 2012, and gold went up 8 times during that period of time. But it did not go straight up, and I can tell you that 10-year period was not an easy period every single day. There was days where, sure, gold was up, $25, $30 in a day, but there was many days that gold was down $50 in a day, and silver, much the same. We saw down days of silver over $1 down in a single day, but we saw a few days that obviously silver was up around that same amount over that 10-year period. So, that 10 years was not easy. First Majestic was obviously very successful in building its company during that 10-year period, and we used the markets to our benefit and raised money at very timely periods, and was able to buy good assets and build out those assets and build a very substantial silver producer. But I can tell you, it was not easy, and we're seeing the first real correction since February right now. I think it's a great opportunity. We're coming into our conference season right now. As many of your listeners may know, there's mining companies go to all these different conferences around the world. Really starting mid-September all the way till June of next year, and there's a ton of conferences. The first one being Denver coming up, and it's an institutional conference, and we have a full slate of meetings over the 3-day period in Denver. So I can tell you that the institutions are there looking at this market and looking at this correction as a time to get in, because the big institutions missed this market. No one expected that the gold stocks or the mining stocks were going to do what they did. They went up 300-400%, some of them, and they were left completely out of the market. So this is a great opportunity for them to start coming in, and I think they will.
Have you already been seeing a lot more institutional investor advisors and so forth, fund managers, contacting you and expressing interest in learning more about the industry, your company? I'd love to know what your sense is as far as the sentiment for some 95% of managed money under hands that don't look at precious metals typically, but are now waking up.
Mm-hmm. Well, that's exactly what's happening, because no one wants to step in front of a falling knife, and this resource market or mining market has been down for 5 years in a row, hitting a low in January of 2016. And January of 2016, it was a pretty ugly month. December was ugly, and then January was even uglier. So, things turned around in February, and all these institutions were just completely caught off guard. Some of them chased the market up, and some of them did okay. But these generalists who have been making scads of money on Apple and Facebook and Google and all the other investments that they've been making money on over the last 5 years, while the mining sector tanked. They've got billions and billions of dollars of cash sitting there waiting to invest, and the mining sector has been the best performing sector in the world over the last 6 months, and they have to get into this sector because they just can't afford to be missing out on such big moves. And now that you've got some of the most sophisticated investors coming into the gold sector, some institutions that like PIMCO and Neumeyer and all these different groups and individuals that are coming into this market, it's really setting a new level, in this market, for further advancement. And who knows how long this bull market's going to last? It could be 4 years, it could be 10 years, but we're in inning one of this next phase.
I think we share your sentiments, Keith, and I mean exactly what you've been saying. It's not easy to ride a bull market to the top. I mean, there's reasons that most of the retail investors, they don't hang on till the top. The market bucks them off. And I think it's important to, if you have a fundamental view of this market, it's very important to keep your emotions in check, because quite often your emotions will lead you to do the opposite of what rationally you should be doing. When you have a couple of weeks where the market's down hard, your gut's telling you, I need to get out, this was a mistake. When in reality, it's an opportunity being presented to yourself that if you can check your emotions, if you can overcome your emotions and take advantage of the opportunity, in the long run, you'll likely be rewarded well for that.
Well, that's exactly right. The way to make money buying, look, I'm an expert in mining companies, but it's the same as any other industry. You got to follow good management teams that have good projects and stick with those companies, buy a handful of them and stick with them for a long period of time, multi-years, and that's how you really make the big money. And you can sometimes just have to turn your quote machine off and not look at your portfolio, and sometimes that's the best advice.
Yeah, it's interesting to hear you speak about a forward bull market of 4 years to 10 years duration, and so much of what will shape that evolving future is the mining supply and impacts that we've seen to the mining industry with all of the corrections since 2011 harming many a company. What's your take as far as when you look out in the silver market in particular? We've seen estimates from industry market watchers of 8-7% decline in 2016 or 17 forward. Where do you see silver as far as the impact to mining production on a going forward basis, and how that would tie into prices going forward and the duration of this bull market? Do you have a sense as to where the industry is now? I know you think much about this.
Yeah, well, I do, and I sometimes get criticized for my bullish stance, because I think I'm probably one of the more aggressive guys out there that speak of triple digit silver and so on, and I love gold for all the reasons why your listeners obviously know, governments, negative interest rates, money printing, and all those kinds of things, and also mine supply is also dropping as well, and demand for gold is going up. But I look at silver as really the most exciting metal of all of them. I look at silver as a strategic metal, and I don't look at it as a precious metal. I know some people think silver is precious and call it a currency and so on. I look at gold as a currency, but I look at silver as something very strategic, because everything that we do as a human race requires silver, and there's this big disconnect. You ask people on the street, oh, what's silver used for? Then they'll say jewelry or something like that, silverware.
Right.
They won't. You could point at the office buildings that you're standing beside, and point at all the windows, and you realize there's a silver coating on all these windows, preventing UV lights from heating up these office towers and boiling everyone inside. And your mobile device that you've got in your hand, you realize there's silver in that, or do you realize there's silver in your automobile or your house, and so on and so forth. And as we electrify the planet, as more and more people come to where we are in North America, our economies evolve around the world. Silver is extremely necessary to electrify all the parts of the planet that aren't currently electrified. And you add solar panels, robotics, fuel cell cars, electric cars. You add all this stuff together that we're doing as a human race. Silver has to go up substantially higher to make it economic to continually to mine it, because currently we're mining, I've said this many times in interviews, 9-to-1 gold silver. So for every 1 ounce of gold we're only mining 9 ounces of silver. So silver is extremely rare, and then people really don't understand how rare it is. And one of the things that I look at as well, in addition to just the 9-to-1 ratio mining, and we're trading at over 60-to-1, as everyone knows, close to 70-to-1, but also just the fact that there's so few silver companies on the planet. When I put together First Majestic Silver back in 2002, there was a handful of legitimate silver companies in the space. There wasn't a lot of them, but there was a good half a dozen legitimate silver companies that produced more than 50% of the revenues from the sale of silver. Today, there's really only 1 or 2 left. and you ask the CEOs of these companies that used to be silver companies, and they'll tell you quite clearly that we couldn't grow the business if we stuck to silver, because there's a real lack of silver mines. And First Majestic's been extremely fortunate in being able to acquire 6 pure silver mines, virtually pure silver mines, and having 2 others projects in our portfolio that are also both basically pure silver mines. So we're very unique in the whole space out there in the silver space.
Keith, you mentioned that you are a big silver bull, and that's clearly backed by the companies under your management, including First Majestic. But I was particularly interested in your newest venture, First Mining Finance. Your team has accumulated quite the portfolio of mineral asset properties. I believe on the most recent report, First Mining Finance had accumulated over 10 million ounces of gold equivalent resources. And for those who may not have heard about First Mining Finance, I want to give you the opportunity to let listeners hear about the mission of First Mining Finance, what led you to start the company, and where do you see it going from here?
Well, I guess I come down. Look, I'm a serial entrepreneur, and I look at myself as an investor at the end of the day, and I put together 2 companies previously to First Mining Finance. Of course, First Quantum Minerals in the 90s, and then First Majestic Silver in the 2000s, and I put those companies together really at the bottom of the cycle of those particular cycles. If you look back at what we achieved at First Majestic, of the 6 producing silver mines that we have in First Majestic's portfolio, I bought 4 of the 6 between January of 2004 and June of 2006. There was no competition. They were easy to buy. I paid virtually nothing for them. And of course, we built one of the largest silver producers in the world as a result of that. Now this bear market created exactly the same phenomenon, and I looked at this industry and I saw the valuations that were happening. We were seeing companies that were trading at $200-300 million at their peaks, trading at $10 million. It was just ridiculous. So I put together First Mining Finance. It took a couple of years to merge a few different private companies together. We came public in April of 2016 with 18 projects in it, and with no gold. It was just all basically brownfields and greenfields projects with no 43-101 compliant gold ounces in the ground. But we wanted to use the company to go and buy up a bunch of target companies that we identified during the pre-go public period, and we had identified a whole group of companies, and we hit them hard, and we were very successful. We bought 8 companies over a period of 13 months. No one's ever done that in the history of mining, as far as I know. We went from 0 gold ounces to around 14 million ounces currently. That's all categories. We're going to be updating 43-101s over the next few months to upgrade some of those ounces and so on. But what we've achieved as a company is just absolutely amazing, and I'm very excited about what we're doing there.
As a follow-up question, as you mentioned, you're currently acquiring properties and holding on to improving in the ratio of silver to gold normalizing. Is there a specific market price ratio or any certain data points that you're actively looking at that's going to signal to you that it's time to just start entering into agreements to develop those properties, or how do you evaluate that development process?
Well, look, we've got 28 projects in our portfolio, so we've got, a huge portfolio of assets in First Mining Finance, and some of the top assets, like the core assets, let's call them those, are in Ontario and Quebec and Newfoundland, and then that's where the gold is. That's where the 14 million ounce is spread over those projects, and we're not going to really do much with those. We're looking for much higher gold prices before we start monetizing those assets, and we're actually probably even going to drill a couple of holes, and then that wasn't part of our original business plan when we first bought the portfolio. We were just simply going to bank them. But today, you look at what's happening in the marketplace. That when the miners are coming out with drill hole intercepts, the shares are actually starting to perform, and I think that's a change from what we've experienced over the last few years. When you brought out a good hole, no one really cared. So we've now come to a point where it's likely cheaper to drill for ounces than it is to buy ounces. A year ago when we first entered into these different agreements to acquire our portfolio, back then it was cheaper to buy ounces.
I love the way you look at the mineral bank thesis, and a lot of stackers we like to call them stackers. the more people who are focused on just buying metal and squirreling it away and being outside of the banking system is largely a pretty good description of the majority of our audience. And our audience is beginning to find the prospect of getting exposure to mining shares interesting. And I'd like to take this opportunity to share with you an idea that I've been kicking around. I'd love to see mining companies do direct purchase programs to enable smaller investors to be outside of the Wall Street community and buy stocks directly. Is that something that you've ever given some thought to? And there may be some advantages too to kind of have a more diversified share base. And there are definitely pros and cons when it comes to institutional investors versus retail and all that. But I'd love to know your thoughts about something like that. And you've been a trailblazer as well too when it comes to just being willing to speak out. And very few mining industry executives do speak out when it comes to spotlighting the manipulation that's going on and all of that. So I'd love to know your thoughts as far as the possibility of you considering doing a direct stock option program. Is that something you ever thought about?
Well, we are a Canadian company. I know we're listed on the New York Stock Exchange, of course, but we have to follow the Canadian regulations because that's our primary listing. So we don't have those types of programs in Canada. They're just not allowed under our regulatory regime. We do get a lot of questions from U.S. investors, that wish to, buy stock directly from the company. The only time we can do that with U.S. investors is through a prospectus offering. So, we need to, have an offering or a financing take place, and in most cases, those investors that are participating in those public offerings or those financings need to be accredited investors. So, it's very, very difficult, it's actually impossible for, your average retail investor to buy stock directly from a company like ourselves, unfortunately. But, going back to, your earlier point about, stackers, it's interesting. I don't hear that term very often, but I understand it because I know there's a large audience out there of people that just accumulate bullion over time and keep it in their homes or wherever they may keep it. But to buy a good quality mining company, you're going to do better than just buying the metal. And I know that some people don't want to open brokerage accounts, they don't want to buy stock, they don't want to be within the banking system. And that's unfortunate. Individuals like that, it's going to be very difficult for them to take advantage of really what happens in a true bull market in mining stocks, because look what happened in First Majestic Silver, for example. There's the silver price went from $14 to touch 21 just barely one day, got up to $21, breached 21, and the stock hit $24 from a low of 3. So it goes from 3 to 24. So that's a $21 move on a basically a $6 move in the silver price. That's pretty darn good leverage, and that's the kind of leverage that investors should expect to see when a true bull market occurs in mining stocks, and the metal starts to move. And unfortunately, if you're just a physical metal owner, you're going to not participate in that type of move.
And diversification is good too. I mean, we frequently speak. We're a bullion company, but we also talk about the wisdom of having diversification because there is really nothing certain when it comes to what governments may do and so forth. I mean, we are living in truly unprecedented economic volatility.
Very much so, I can't tell people how to manage their portfolios, obviously, but so sometimes it's good to have accounts outside of your home country. To have some diversity. Have your money in different baskets in different areas of the world and in different instruments and so on and so forth. So, as you say, diversity is key when it comes to not only creating wealth, but also keeping the wealth that you've created.
Switching gears a little bit, last year you made news by discussing how an industrial company was seeking to explore options for sourcing silver with First Majestic. Has that happened with other companies since that time? And have you heard anything?
No, it's just happened the one time with us. We took it seriously. Obviously, we treated them like any other potential buyer that we have of our metals. We don't sign long-term contracts. We will. Pardon me. I should restate that. We will sign long-term contracts for supply of our concentrates, which contain lead, zinc, and silver, but we won't price the metal. The metal is priced at spot upon when the metal's delivered. So when it comes to the doré production that we do, and most of our silver is in the form of doré bars, which are big bricks of metal. Those we do not sign long-term agreements with. So it's this particular buyer. It was just interesting. I'm not going to say the name, but there's a very substantial electronics manufacturer. Just the fact that they contacted us, and they had 3 people meet me and one other person within our company. Was I don't know, that tells me there's something going on in the supply chain. If they're coming directly to mining companies, they must be concerned about something within the supply chain.
Now, Keith, did you ask them at all? I mean, it's pretty widely known that last year, second half in Q3 especially, there was a pretty strong retail shortage of silver in investment form, but we didn't hear a lot about shortage per se. Say the 1,000-ounce bar market or that type of thing. Did you ask them whether they were approaching you just basically with due diligence for the future for the bull market, or had they had some sort of supply issues in 2015 sourcing silver?
Yeah, they were very careful about giving me any information. I was interested in that as well, and I was actually interested in their consumption. I wanted to know, well, how much silver do they actually consume, in all the products that they manufacture, because they manufacture lots of different products, and they wouldn't tell me any of that information. So, no, it was a very one-sided meeting, and we allowed them to bid on our products as we do each year with different supply or buyers around the world. They weren't competitive.
Was it your sense that they were trying to definitely secure supply, or maybe just trying to do bargain hunting? Because the media treated this story when it broke as, these industrial buyers are just trying to explore options to save some money. What's your sense as far as that poo-pooing of the story?
I don't know. It's a fairly new thing. As a miner, we have channels to sell our products, and because we're selling silver, it's a pretty easy metal to sell. We don't have to really work on selling it. We don't, there's a very large market for it. So we just, we have 3 traders that buy our metal, and they have commercial buyers on the other side. Whether it's Sony or Toyota or Intel or whoever the buyers are, they have that relationship. So we don't know where our metal is going. We just we ship it to the refinery. Republic Minerals or Republic Metals in Miami, for example. They get it, they refine it, and then the trader who has we've agreed to sell that product to, or those ounces to, instructs Republic to ship it to wherever it goes, and we don't really ever know where it goes, when we just get paid for it. So it's a pretty easy relationship, and it works really well. But for someone to come in and bypass that normal way of doing this business, and this business has been run like this for decades. It's not and it's just very odd. It's the first time it's happened for us, and I think it's potentially something that could be happening more in the future.
To your knowledge, is this something that you think is the first time that's happened to any company? I mean, I really have never heard much about this.
Yeah, I've not polled other companies. Maybe this, at the upcoming conference in Denver that I mentioned earlier, I might ask a couple of the CEOs there if they've had similar experiences. But it's definitely a first for us. I can't answer the question about others.
Right.
Well, before we close the show, let's just spend a minute or two talking about the physical market here, what we've been seeing. We definitely saw a big uptick in demand over the past week or two, and it really has continued into this week, even with prices going up. End of last week, early this week, everyone getting back excited, and then the second half of the week, a discount again. It's spurred continued physical buying, especially we noticed in the past week, gold, both gold maples and gold eagles. Several of the primary dealers actually had sold out of inventory that they had on hand, so that just shows you the level of at least a burst of retail investment demand for gold bullion coins. And we've been seeing the same thing in silver. 90% premiums continue to slowly inch up, availability decreasing. And, well, we haven't seen much movement yet, premium-wise, or any decrease in availability on the official mint coins like silver eagles, silver maples, those type of things. All the secondary product, again, continues to vanish from the market. And, again, it's really been the past 3 or 4 months since silver began that big move up that we saw just massive amounts of secondary product coming back into the market. And it was everything from just used in secondary bars to a lot of the refiners with excess capacity kind of dumping some inventory onto the market. So that's drying up, so that's a good sign as far as supply. But again, to me, it remains an excellent time premium-wise. With silver here under $20 an ounce. Premiums for most retail products are near the lowest they've been over the past 5 to 10 years. So what's your thoughts here, Keith, as a retail bullion investor? I mean, obviously, silver's well off the bottom here of 13 and change 9 or 10 months ago. But in the long picture, to me, we're still under $20. It still presents a pretty compelling opportunity here, in my opinion. What's your take here and going into the next 5 to 10 years with an outlook?
Yeah, these short-term, trading things that you're referring to, the eagles and maples and so on and so forth. I try to follow it as best as I can. I obviously don't follow it as closely as you follow it. I really look at very much the bigger picture, the more long-term picture, and the supply and demand fundamentals going over the next 2 to 3 to 5 years and so on. And I think it's just fantastic. And I felt the same 14 years ago when I put together the company. And I remember I put together First Majestic at when silver was $5, and when silver broke through 10, that was a big deal. And I called for $50 silver back then, and people thought I was crazy. And silver did actually hit $50, and now I'm calling for triple-digit silver, and people, some people anyways, call me crazy. So I like the fact people call me crazy, because then I know I'm going to be right eventually. So hopefully within the next 2 to 5 years I am right. I think I will be right, just based on what I know of the macroeconomics of silver. Supplies are tightening, and consumption's increasing, and the ratio of 9 to 1 points directly at that issue, because I can tell you 10 years ago the ratio was closer to 15 to 1. Now it's 9 to 1, and that ratio is going lower.
Yeah, it's certainly going to be interesting. What are we going to do, guys, when people stop calling us crazy? I'm not sure how that'll feel.
You'll be very busy.
Yeah, the CNBC will be phoning.
All right, it's great to have you back on the show, Keith. We really appreciate your time.
Well, it's always a pleasure, and I love talking about things I love to talk about. So
wonderful to speak with you, and I should say as well too that I'm thoroughly biased. I appreciate your abilities as a mining share executive, and I control a lot of shares in both of your companies, and love the work that you do. So I just wanted to let our listeners know that I am thoroughly biased, but I'm very much appreciative of your hand on the tiller.
Yeah, I think that makes 2 of us, Eric.
Yeah.
Well, I appreciate that, and people are welcome to follow me on Twitter. I've got a Twitter. I don't do a whole bunch of tweeting, but at Keith_Neumeyer is my Twitter account, and people obviously can contact either of the companies at any time. We got Todd Anthony and Derek Iwanaka here to field any calls that are coming into the company, and both of them are very good with anything that's required. So.
All right, we'll wrap the show there. So for the Doc, Tyler, Eric Dubin, and First Majestic Silver and First Mining Finance is Keith Neumeyer. Thanks for tuning into this week's SD Weekly Metals and Markets.